There's also a passive versus active distinction, right? And without being a real estate professional, rental income is considered just passive income to you if you're not taxed as a real estate professional. And you can't treat those losses as active and offset other income like I do with the delivery service partner that I'm running, just a cash flow business. So just having a cash flowing business, you got to break down the actual secrets. What I like to do with my Amazon delivery company is I actually have weekly meeting, so having over 200 employees, and how do I actually somewhat stay passive in the delivery business that allows me to be a real estate professional status, which is a tax category. It doesn't mean that I'm actually actively out there selling real estate like a real estate agent. This is different. This is a tax designation of real estate professional status, or the people actually, the synonym or the acronym that you hear out there is actually called reps, and the secret actually isn't doing more. It's designed, for myself, it's designed in the business so I actually don't have to be there daily. I have one major structured meeting with all my management, built out layers that are leadership inside the delivery company. I have an operation manager, there's dispatchers, there's fleet managers, there's safety and quality manager, there's human resources managers. So what I do is on a weekly meeting is I actually set myself up as the, let's just say, owner of the company, but I pull myself to the side, and then I actually have a VP of operations. So I meet with everybody so that way decisions aren't getting bottlenecked when they're just waiting for Travis to answer it for them. Everything is not dependent on me. And this was hard to do. I had to take my ego out of it and learn this from other businesses of how do I build a team. And I actually think I got a lot of that from playing college football and high school football and hockey, etc., where I played a team sport. Like wrestling is still a team sport, but people go out and they have to perform by themselves. You look at Michael Chandler, who was a great collegiate wrestler, and now he's a UFC fighter. Everybody knows him. It's just an example where he's doing a great team sport, but he's out there one-on-one, doing his own thing. And me, I always played a team sport, and you're out there with 11 other guys that are on the field at the same time. It's actually what I did is I built leaders around me, and we did the exact same thing. I was never the best football player. I wasn't the fastest. I wasn't the strongest, but somehow I always ended up as the captain, which was great. But I could actually find the good in other people and where they excelled. Everybody is always scared to make a mistake when it comes to business. And I don't know if they actually learn that in school. I actually cherish when our teammates or when, our employees actually make mistakes. If they're making the mistakes over and over and over, that means that you got the wrong person in the position. Making that mistake and learning from it, and them having the ability to make a decision that's best for the company, the right thing to do, fiduciary right thing to do. And if it's a non-mistake, you audible and you go on from it. I actually cherish all the employees that actually I work beside and never say that they work for me. It's one of my goals is actually starting a different company by the end of 2026 into 2027. We'll push to 350 employees, starting a new division out. And I cherish that, and I wouldn't be able to do it if I didn't have a good, solid team of structured people that are working beside me and good mentors or good other people that are operating in the Amazon business to be able to help me. And I've done that all by never being the smartest guy in the room. I've always removed myself, and I sat back and I listened. Even with the real estate professional hours, I removed myself from the daily operations. I'm creating leverage, I'm protecting my time. That's freed up everything, and it was all intentional. I'm relocated into building and managing real estate investments, from that standpoint. And the real estate professional status, you have a 750-hour rule. This is where you truly got to study this. And I always say, don't take it from some guy on social media that's telling you what to do and take your word for it. You got to build your team like I have with Graceland and, document everything from that standpoint. And you need 750 hours per year in real estate activities. This is the true baseline, threshold. So then you have like your more than half-time rule, where more than 50% of your total working hours across all businesses, they must be real estate activities, qualified real estate activities. What are those? I mentioned it. You have real estate activities. So what is that qualified real estate activities? These are hours, they must be in real property trades, or businesses such as development, acquisitions, conversions, rental operations like management, leasing, brokerage, material participations required required, you must participate in the real estate activity. So that's one of the things that people get wrong. You just can't be a passive investor into something and not be actively participating in all the activities. And action involvement matters. Activities like analyzing deals, managing properties, overseeing operations all count towards participation. But you definitely have to document everything. And that is highly the most crucial thing that you can do. Because just like if you're going to write off mileage or meals or travels, you got to have a reason that you're doing it. As Tom Wheelwright says, to control your tax, you got to control your facts, right? And if you're writing things off without documentation, you have a fake write-off, from that standpoint. But then there's also a passive versus active distinction, right? And without being a real estate professional, rental income is just considered just passive income to you if you're not taxed as a real estate professional. And you can't treat those losses as active and offset other income, like I do with the delivery service partner that I'm running, just a cash flow business. So instead of being stuck in day-to-day delivery logistics, I can focus those hours and analyze deals. I can manage our current portfolio and grow that portfolio. The delivery business for me with my Amazon, delivery service partnership, it's become a cash engine, consistent income that fuels down payments. Where I take the cash flow from those business, a portion of it, because you got to leave cash into the business, obviously, to operate. As my mentors always tell me that no cash will survive, or no business will survive without cash. But that extra cash, instead of, as I say, going out there and buying fancy cars and everything, which don't get me wrong, I do those things too, but I always say that's the money that I had with the liquor company. But that fuels a down payment and acquisitions of buying more property. And then the real estate actually becomes a great tax strategy against my delivery company, where I'm utilizing that depreciation, cost segregation, and those losses to offset that active income. And that's actually, I'm not trying to own everything myself from that standpoint, but offsetting that active income is actually how I get to the portion to where I don't pay tax. Hopefully by the end of 2026, not all of it owning 100% of my own, but I'll actively be close to 1,000 rental units. Robert Kiyosaki says it the best. He goes, if you only have one home, you're selfish. But if you can invest in your communities and looking around where other people can live. My partner Dan Breesy and Mike Roeder with Granite Towers Equity Group were purchasing a property actually down in Dallas, in Plano, Texas. It's 226 units and 500 people live there. That's a separate item to talk about for real estate, but when you look at that, you're actually supplying housing to 500 people in a great area with great schools. It's right across from a Whole Foods. It's sitting on 14 acres. And the program that we got developed, we're going to stick $5 million into capital expenditures or remodeling into the property, and that's just going to uplift the community. All that is actually, I can do that by taking the money, instead of paying tax to the government, I can actually take that money that I would actually be paying to tax and actually put it into real estate that's going to kick me cash flow long term. So I'm building that actual cash flow without being there to earn that return, and I'm letting the property service it for me. So the big takeaways, right, is just you got to learn that tax code. You definitely got to build that team. Find your Graceland is what I always say, around me. And you got to work with a qualified, tax person like her. Don't take my, vision for it. You got to put together your own team from that standpoint and acquire that long-term cash flowing assets so you can actually buy back your time. If you're ready to stop playing checkers with the IRS and start building real generational wealth, click on the link below and see you in the next one.